Welcome everyone, and thank you for attending today's Great Boulder Resources Investor Webinar. My name is Nicola Gazzatti of Investor Relations Consultancy Corporate Storytime. Great Boulder is a mineral exploration company with a portfolio of highly prospective gold and base metal assets in Western Australia, ranging from greenfields through to advanced exploration. The core company focus is the Sidewell Gold Project at Meekatharra in the Murchison Goldfield, where exploration has defined a mineral resource of 7.5 million tonnes at 2.8 grams per tonne for 668,000 ounces of gold. I'm delighted to have Great Boulder's Managing Director Andrew Paterson with me today to run through a company update following the release of the March 2024 Quarterly Activities Report. We will then follow this with a Q&A session. So without any further ado, it is my pleasure to hand over to Andrew.
Thanks, Nicola, and thanks Corporate Storytime for organising this. And also, of course, everybody who's registered and watching and submitted questions. So I'm just going to share my screen. So I'm just going to flick through a quick 10-slide summary of what we did during the quarter and where we're going next, and then we'll move on to the Q&A. So firstly, we're still really always talking about Sidewell, and then more recently about the Palel project immediately to the south of it, but it's all about the Meekatharra area really for us. We've done no work over at Wellington in the quarter, and just recently we went back and did some more work at Whiteheads just to keep that tenure alive, but other than that there's been no progress there, so it's all about Sidewell. So to recap that, we've been active at Sidewell now for 3 years. We've discovered and defined 2/3 of a million ounces. We have a publicly stated goal of 1 million ounces in resource, and I'll talk a little bit more about that later. And then we're now at the stage that we're starting to think about progressing this through to scoping studies and feasibility work. So just briefly, in terms of the capital structure, in concert with our peers, the share price has deteriorated somewhat in the last 12 months, but we've been kind of going sideways since late last year, and just recently had a bit of an uptick on the back of renewed interest in gold juniors, also on the back of a very, very strong record high gold price. And I think we're now really set for a bull run, basically, where this is all starting to trickle down into the junior space. And my view has always been that that would affect the producers first, and then people would be looking for quality advanced gold explorers to put money into, and it'll start to trickle down into them. So obviously I see Great Boulder fitting in that category. We had a vote of confidence on Friday. You might have seen one of our major shareholders converted about $300,000 worth of options. So they were in the money at 5.4 cents. And that's Scott Wilson of Zabina Minerals. So very happy to see Scott now moving into substantial holder territory. And that's obviously, you know, good for the cash balance and good for the company going forward. So the quarterly summary, relatively busy. So we drilled 192 air core holes, all at Sidewell, for a bit over just under 11,000 metres. And that was a number of areas. We drilled at Saltbush at the south end of the project, and then a few programs around there to the north and south, and also to the north of Ironbark. So really this is a continuation of the early stage testing of all these new targets along the Ironbark corridor. And of those, the first one drilled was Saltbush, and that's what we're now calling the Saltbush discovery. That's progressing really well, and we're confident that we'll have a mineral resource there fairly shortly. During the quarter, we also identified some priority targets at Palel just by reassessing historic geochemical information collected by Castle Minerals. And we've been progressing heritage surveys on an ongoing basis. So we've just recently cleared the extensions of the Saltbush deposit and some more areas around Ironbark North. So as we speak, we're drilling at Mulkabill North today. That's going well. We did some RC there and just switched back to air core. We'll also be drilling the Matilda prospect, which is one of the one of the areas actually identified by Doré Minerals that we've never been back to. That's an interesting little high-grade intersection there that's never been followed up. And we're continuing with the field mapping and target generation, particularly at Polel to the south. So the guys in the field are always busy, whether there's a rig on site or not, they're always out in the bush, boots on ground, and creating new targets. So just to recap, really, this is the slide that I've had in our corporate presentation for a while now, but this is a properly large-scale opportunity. And I have spoken about Sidewell a lot as being a company-changing opportunity and transformational. And there's, you know, I've seen recently a bit of blowback about the amount of hyperbole in exploration announcements, but really, I think it's hard to argue that Sidewell has already transformed Great Boulder as a company, and we see it has a long way to go. So any intrusive related system which is creating these hydrothermal chemical fingerprints over more than 14 kilometres of strike is a truly large scale opportunity, and it is taking us a while to illustrate that by drilling using the drill rig, and I'll also talk about that during the Q&A. So really, we're still working down this ironbark corridor. Saltbush at the south, as I said before, looking really good, and the northwesterly extensions of Saltbush are also pretty exciting. And now also testing this Matilda prospect up here on the other side of the fold. Zeroing in on the Saltbush discovery, we've now defined high-grade mineralisation over about 300 metres of strike. And pleasingly, it's got exactly the same geology and alteration as ironbark, so it's a really nice little ironbark analogue, and that was what we were looking for there. That was based on our geochemical targeting technique. There was existing old workings at Saltbush, so it was kind of an obvious walk-up target. And recent drilling is starting to illustrate a plunge to the north-northwest, so a long strike. So what that means is that there is some drilling to the shallow drilling to the north, and we think that it's probably plunging underneath that, and we'll be following that up with deeper drilling shortly. So just a couple of sections here. The one on the left is a conventional cross-section looking north. You can see it's a fairly stock standard, steeply dipping mineralisation, and it's associated with the contact positions between the mafic rocks, which are the more brittle unit in green, and the surrounding country rock, which is a softer ultramafic, and that's a classic structurally controlled style of gold mineralisation that you see every day in the eastern goldfields, and again, same as ironbark. Then the section on the left is a long section, so looking west, north to the right of the page, and you can see this potential northerly plunge starting to be illustrated by the drilling there. Excuse me. Interestingly, we see a similar northerly plunge at Mulga Bill in the high-grade veins, so that may be a kind of a regional imprint. Then what I was saying earlier about the Saltbush extension is that it sits within a quite coherent gold arsenic anomaly. The background image here is a heat map of arsenic antimony that we've used for ironbark style targeting, and there's also point samples in the auger data there with elevated gold as well. So we now think that that's a pretty good area to extend our drilling. We've just done an area clearance of the Aboriginal Heritage Survey over that. Previously, we had site avoidance lines every 200 metres, but we've now infilled the whole thing, and that will give us carte blanche to drill that whole strike extension. So now, just to cap that off, looking forward for the current quarter and through into the second half of the year, we'll continue with phases of drilling at Saltbush, which will mainly be RC around Saltbush itself and air core drilling to the north-northwest. We'll continue testing the other ironbark geochemical targets within that 14-kilometre corridor. More drilling at Mulga Bill North. We've just done some geological drilling, just defining the cross-cutting Proterozoic dike, which is really just to fine tune our mineral resource there at Mulga Bill to know exactly the spatial extent of that dike, and also some drilling to the north of that. Drilling at Matilda and then moving down to Pol L for the first phase of drilling to the south there. And that'll be pretty interesting because there's some nice targets in that data. While all that's going on, through the second half of the year, we'll be progressing the Ironbark mining lease, which the next step there is a mining agreement with the local traditional owners. So we'll be starting that negotiation process with them. We anticipate that once a mining agreement is reached, then that lease will be granted. And obviously we'll be scoping that mining agreement such that it can be extrapolated across the whole project as well for any future mining activities. At Mulga Bill, we're looking to do resource conversion there. We think that there's a relatively small amount of drilling there to convert the resource, which is currently slightly less than 50% indicated. We want to lift that percentage up to about 75% indicated. And there's really, that's all about scoping studies. So we need a minimum of 75% indicated resources to publicly announce the results of a scoping study. So that's our target there, is to just do a bit more drilling around Mulga Bill, tidy up some of the inferred areas so we can convert them to indicated. And while that's going on, we'll also be recovering sample for met work and having a look at the leach characteristics there of the different ore types. So back in the early days, we did one met sample at Mulga Bill, which indicated a very high recovery and a low tails grade of 0.1 grams per tonne. That's just on a single sample. We want to look at that more holistically from various areas of the deposit and look at how that would go with a standard CIL, cyanide leach type gold extraction process. And that's it for now. So I'm just going to hand back now to Nicola and we'll go into the Q&A.
Thank you, Andrew, for the update. Moving on to our Q&A session. Andrew, our first question for today: will a future scoping study include utilising nearby mills or a Great Boulder standalone operation, or both?
Good question. And so firstly, during the scoping process, we would obviously keep our options open and consider either of those alternatives or even a combination. So both would be a good outcome in the sense that if we could deliver tonnes, for example, to the Bluebird mill to generate early cash flow while we were preparing to build our own infrastructure, that would be one kind of useful way to go, in the sense that it would give the company early cash flow to pay for the capital. We'll certainly consider building our own infrastructure, and interestingly, the guys at Mika Metals are now getting ready to start refurbishing their mill, so there may be other options in the region as well. So certainly over the next year or so, we'll be keeping an eye on everything that's going on.
Thanks, Andrew. Our second question: it's clear that reaching a reserve of 1 million ounces is the board's goal for Great Boulder. Can we expect a plan to monetize what has already been identified? And is there any low-hanging fruit that would support an open pit scenario to bolster our cash position?
Yeah, so firstly, the million ounces thing, there's no golden rule around that. And really, now that we're at 2/3 of a million, and we think Mulga Bill is a viable mining proposition, and Ironbark is even more obviously a viable mining opportunity. So we'll start looking at scoping studies early next year. It is currently the corporate strategy. So whether we're at 1 million ounces by early next year or not, we're planning to start scoping work initially on Mulga Bill and Ironbark anyway. We think by then we'll have a pretty clear line of sight on the rest of the 1 million ounce target. In terms of low-hanging fruit or early stage cash flow opportunities, yes, Ironbark is the most obvious one there, both because it's a near surface deposit, 100,000 high-grade ounces and we've got a mining lease application there. So for a number of reasons, that sticks out as one opportunity. However, we're also very mindful and cautious of devaluing the rest of the project. If, for example, we were to sell Ironbark as a standalone lease, that would actually be a saleable asset. But if you excise that from the rest of the sidewell project, it may devalue the remaining ounces. So we need to understand all of those dynamics before we pull the trigger on anything. I understand, that may be frustrating for shareholders who've been in the stock for a while and are looking, for us to start generating cash and reduce our reliance on the capital markets. And I fully understand that position. We're certainly open to those opportunities. However, we're cautious about making or optimising the outcome for the whole project and not just for a short-term gain. As an aside, as I think everybody understands, we are looking to sell the Whiteheads project at some stage in the next few months, and there may be some opportunity there, but excuse me. To be honest, I don't think that will be a material transaction in terms of paying for the projected work at Sidewell going forward.
Thank you, Andrew. Our next question. Can you please take us through your table 1 and explain, please, from the perspective of resource domaining?
Yeah, so happy to do that. It's quite a complex question, actually. Before I start, I would refer people who are interested in this sort of thing to any of the podcasts by Renee Stark on resource domaining, because firstly, he's a guru at this stuff. It's his bread and butter, and it's what he does for a living. Secondly, he's extremely good at illustrating these concepts such that people can easily understand them. So really, the thing to look for in the table 1, I won't put ours up, but it's on just about all of our announcements. As a standard disclosure. The key thing to look for in any table 1 is things like the assay technique, the way the sample was collected is all fairly standard these days. Just taking a split sample from the rig. Firstly, in reconnaissance drilling, we composite every 4 metre section, we'll composite that into a single sample and send that off to the lab for assay. If that comes back with a minimum level of gold in it, we'll then split that into 4 single samples and re-assay those 4 samples. So that's kind of our standard process, and that's illustrated in the table 1. Then you look for the quality of the assay technique. So the standard process for gold is generally fire assay or aqua regia, and we also use a 4-acid digest, which just gives us a very low level analysis of 48 gold plus 48 other elements. The lab that's used, we use ALS and Intertek, which are 2 of the big 4 labs, and pretty much everyone uses one of those big 4. Certainly, you'd be questioning the validity of data coming from kind of Dad and Dave's backyard lab, but anybody using one of the main labs is pretty solid. And then the other information that we get, obviously geological logging. We use handheld XRF analysis of all our samples, all our RC anyway, and scan everything. And then that gives us more information on both the lithogeochemistry and also potential anomalism. So all of that goes together, goes into a spatial database, and then is interpreted geologically. And this is sort of getting into the domaining situation. So the other key thing with resources is that geology should be the primary discriminator of resource continuity and not mineralisation. And historically, there's been a lot of geologists who would just basically join the dots, look for all the gold assays and say, oh, it looks like it's running north-south, we'll just connect that to that. That's fine, but there's a lot more that goes into it. And the geology and alteration should be the first things to be modelled, and then the mineralisation comes after that. So in terms of domaining, for example, at Mulga Bill, we've got 2 different generations of mineralisation. There's a large north-south subvertical domain, which is what we think is the first mineralising event. And then there's later on, we think there's a remobilisation into high-grade flatter veins, the 45-degree high-grade veins, and these are where we've had the really spectacular gold hits. And so we've modelled those two generations of structure separately, which is obvious, and we've also domained them in the interpretation separately, such that the flat veins, assays within the flat veins only report within the flat veins. Assays outside of them in the subvertical zones only report to ounces in those subvertical veins, and they're kept separate. So firstly, on the subject of domaining, the geological continuity of those two sets is really, really good. So that gives us confidence that what we're doing is most probably correct. And I'll say most probably because this is all created from point data well below surface, and you don't get down there to actually look at it until you dig it up. So it's kind of effectively an educated guess, but there's a lot of experience and knowledge that goes into that. Once you've reached a hypothesis of what a vein looks like, what angle it's on, how far it goes, then you test it with more drilling. And if it's still coming back that you hit it in the places you expect it to, then that's another tick in the box. And we've seen that with our resource conversion work at Mulga Bill. And then when you do the grade interpolation, then that gets more complicated again, because you're using very advanced geostatistical modelling, and you're struggling with the complexity of very high grades next to lower grades, and how far do you spread those grades? And we've been pretty conservative with our domaining so that we're not throwing those really high grade vein assays very far, in fact, from the drill hole. So we try and constrain them quite conservatively. So in my view, there's two or perhaps three types of resource that you see in the market, and one is a resource that might be created when an asset is up for sale, and you might want to maybe extrapolate things a bit further than you otherwise would, and you're adding metal to that resource in a less conservative manner. The second type of resource is one where you think you'd be happy to actually go and mine it, and because I spent a long time as a young geo in underground and open pit mines as a production geologist, I know exactly what it takes to dig up a resource and reconcile it month by month. So that's kind of the approach that we're using at Great Boulder. And then, possibly a third style of resource, which is just a load of crap, and you just kind of ignore that one. So of the first two, I think we're definitely the conservative approach, and I'd be happy to dig up these resources any day. I think they're pretty robust.
Thanks, Andrew, for that explanation. Our next question: given Great Boulder's position as a leading ASX gold explorer with a strong share register, will the board consider the idea of raising more capital to ramp up exploration activity during this time of record gold prices?
Yeah, that's a great question. So I actually don't know the answer to that. We were in Sydney last week for the RIU Resources Roundup conference, or actually the week before. And that question came up a few times, and people are saying, look, companies are being rewarded now for having a red hot go, and maybe you should be out there drilling faster. And I really like that idea. I've still kind of got my hand on the throttle a bit at the moment. I'm not letting Dan drill too many meters. Yeah, so we're kind of in between, and I don't want to sound like I'm trying to be half pregnant, but I really like the idea of going faster, but probably just want to wait for a little bit more water to go under the bridge, just to mix a few metaphors. And once we're really confident that it's on, then we'll speed things up as soon as any time, really. We've got more than enough drill targets available to drill twice as fast as we are today, but right now we're still being fairly cautious. So I guess to answer that question, it's certainly something that's front of mind, but we won't be changing our strategy this week, but it could happen any day, really.
Thank you, Andrew. And our final question for today: wouldn't it be better to spend time and money on proving up one particular area to prove it economically viable?
That's also a good question, and but really, we think the best way to optimise the outcome at Sidewell is to have multiple resources available for, and this comes to a kind of a mining scenario where the more different areas of gold endowment you have, the more opportunities you have to fine-tune scheduling. For example, Ironbark and Saltbush as two surface deposits would be useful for early stage mining while we're doing a pre-strip at Mulga Bill. So therefore, the more of those Ironbark style opportunities we can discover and prove up, then that gives us more flexibility in developing Mulga Bill, which is where the kind of the really high grade, the weight of ounces is. So short answer is no. And the reason for that is just all about scheduling and optimization. So we'd love to find another 2 or 3 Ironbark / Saltbush type endowments. And then, I think the whole thing will be an absolute cracker. And we're pretty close to getting to that stage now.
Thank you, Andrew, for the update, and we look forward to watching on with interest for Great Boulder's progress over the coming months. We will have a recording of this webinar available on Great Boulder and Corporate Storytime social media in the coming days. I thank you all for your attendance, and this does conclude our webinar for today. Thank you, Andrew.
Thanks very much. Thanks everyone for listening.